What if the world's oil supply is under threat? What if the market dynamics we have known are about to change? These questions aren't just hypothetical, they're becoming a reality as we speak. We find ourselves in a world where the balance of power in the oil industry is shifting, and the implications are far-reaching. Rising concerns about oil supply cuts driven by key producers like OPEC Plus and Russia are creating ripples in the global economy. Economists are already warning of an inflation smile and the highest US gas prices since October of 2022. A potential energy inflation shock isn't a distant possibility anymore. It's knocking on our doors. But that's not all. The drama unfolding in the Middle East, the ongoing strife in Ukraine, and the shifting sands of international politics are all playing their part in this intricate dance. We're looking at a future where the rules of the game might just be rewritten. So what does this all mean for us? How will these changes affect our daily lives? And most importantly, how can we prepare for what's coming? Stay with us as we delve into the intricacies of the oil market and its global implications. The OPEC Plus alliance, a significant factor in the global oil market, is shaking things up. This coalition of oil-producing countries led by Saudi Arabia and Russia has a hefty influence on oil supply and consequently, global oil prices. Recently, they've made an unexpected move. They've decided to cut oil output. So why the cut? Well, the reasons vary. Some suggest it's a strategic move to control and maintain the price of oil in the global market. Others believe it might be a response to the increasing pressure of inflationary trends and the aggressive interest rate hikes by entities like the Federal Reserve. Regardless of the reasons, the immediate effect is clear: a surge in oil prices. We've seen US gas prices reach their highest level since October 2022, hitting an average of $3.89 per gallon. The impact of these oil supply cuts is felt far beyond the gas stations, though. Higher oil prices can significantly increase the cost of goods and services, leading to an overall rise in inflation. This uptick in inflation could potentially destabilize the economy, threatening the optimism that had been building around the US inflation situation. Even the International Energy Agency, a reputable global energy authority, has expressed concern. They've warned that these supply cuts by the OPEC Plus could exacerbate the slowing world oil demand, inflationary pressures, and interest rate hikes. The combined effect of these factors could push the global economy into a recession. So, there you have it. The OPEC Plus oil supply cuts are not just about oil. They're about the economy, about inflation, about strategic power plays. And as we've seen, their decisions can have far-reaching consequences on a global scale. These cuts could potentially tip the world into a recession, warns the International Energy Agency. What happens when the world's oil supply reduces? Economies tremble. The world as we know it is intricately connected, a vast network of relations and dependencies that become glaringly apparent when something as crucial as oil supply takes a hit. The decision by OPEC Plus to reduce oil output is not just a matter of filling up your gas tank. It's a potential trigger for global economic instability. Let's break it down. Inflationary pressures are already on the rise in many economies. In the United States, for instance, gas prices have reached their highest level since October 2022, and the economists are warning of a potential inflation smile, a stabilization and increase in the fourth quarter of the year. The spike in oil prices is seen as a threat to optimism about US inflation, which has fallen from its mid-2022 highs, but is still at 3% through June. But inflation isn't the only concern. Interest rates are on the rise too. The Federal Reserve has had to raise interest rates aggressively to combat inflation and is expected to continue doing so. This means borrowing costs increase, which can dampen both business investment and consumer spending. On a global scale, the International Energy Agency warns that these combined factors, slowing world oil demand, inflationary pressures, and interest rate hikes, could push the global economy into recession. Any disruption to oil flows, such as those from Russia due to new G7 and European Union sanctions, could raise prices worldwide, exacerbating these issues. Furthermore, economies heavily dependent on oil revenues, like Russia, face their own set of challenges. With military spending on the rise and a price cap imposed by Western nations, Russia's budget is under strain. The reliance on oil exports to China and India to fill the gap is a precarious solution at best. These oil supply cuts are not just an energy concern, they are a looming economic crisis. The ripple effects can be felt across the globe, from rising consumer prices to threatened economic stability. Our interconnected world means that an oil shortfall in one region can trigger a financial fallout in another. The economic crisis just took a nasty turn. Here's what you must know. These oil supply cuts are not just an energy concern, they are a looming economic crisis. Russia, a significant player in the global oil market, is facing its own set of challenges. As the world grapples with the oil supply cuts, Russia has its own hurdles to overcome. Western nations have imposed a price cap on Russia's main export, Urals oil, causing a drop in its price of over 20% since December. This has left a significant dent in Russia's budget, which heavily relies on oil revenues. The challenges don't stop there. Russia's military spending has seen a significant increase, further straining the budget. In fact, spending rose by over a quarter in 2022, partially to finance military operations in Ukraine. This has raised the required oil price to balance the budget, creating a precarious situation for Russia's economy. The country's budget deficit was 2.3% of GDP last year, and it may exceed 2% again in 2023 due to the price cap on oil exports. With upcoming elections, spending cuts seem unlikely, and this could lead to a higher tax burden in the medium term. The government has already increased taxes on the oil and gas industry and may consider further tax hikes in other sectors. What's more, the conflict in Ukraine and the Western sanctions have cut Russia's access to technology, further restricting its oil exports. Despite these challenges, Russia maintains that its economy is resilient. It argues that the sanctions have had negative effects on the West as well. But the reality is that Russia's growing dependence on oil revenues is a cause for concern. Analysts warn of a decline in revenue from oil and gas exports on the horizon. Russia is currently relying on China and India to fill the gap in oil exports. But how sustainable is this strategy? All these factors paint a picture of a country grappling with economic and geopolitical challenges that could have far-reaching implications on its oil export capabilities. As we navigate the potential for another energy inflation shock, Russia's economic struggles could further complicate the global oil supply situation. The future of the oil market is uncertain, and the stakes are high. As we look ahead, a number of potential scenarios could unfold, each carrying its own set of implications for global economies and consumers. Firstly, let's consider the possibility of OPEC Plus continuing their oil supply cuts well into the year 2024. This would likely lead to a further escalation in oil prices, straining economies worldwide. The burden would be felt most acutely by developing economies that rely heavily on oil imports, potentially pushing them into recession. Secondly, there is the risk of black swan events, unpredictable occurrences that could further disrupt the oil market. These could range from geopolitical conflicts and environmental disasters to sudden, unexpected shifts in global demand. The potential for these black swan events adds another layer of uncertainty to an already volatile market. Another scenario to consider is the possibility of an energy inflation shock. This could occur if the combination of supply cuts and rising demand leads to a rapid and significant increase in energy prices. Such a shock could trigger a wave of inflation, further exacerbating the ongoing economic crisis. Lastly, we must also consider the impact of Russia's role in the global oil market. With Russia becoming increasingly reliant on oil revenues to support its budget, any significant fluctuation in oil prices could have serious implications for its economy. Furthermore, Russia's ongoing tensions with the West could also impact the global oil supply, potentially leading to further price hikes. In conclusion, the future of the oil market is shrouded in uncertainty, with a multitude of factors at play. From OPEC Plus supply cuts and potential black swan events, to the risk of an energy inflation shock and Russia's role, the landscape is complex and ever-changing. The economic crisis has taken a nasty turn and the world must brace for the impact. The global oil market is at a crossroads, and the path it takes will impact us all. We've dived deep into the complex interplay of OPEC Plus and oil supply cuts, and how these cuts are setting the stage for a potential energy inflation shock. We've also explored the global economic impact of this situation, as well as Russia's pivotal role and the challenges it faces, particularly its over-reliance on oil revenues. Lastly, we've painted a picture of the future of the oil market. a future that seems to be marked by continued cuts and possible black swan events. This is a tough pill to swallow, but the economic crisis just took a nasty turn. It's a critical reminder that the oil market is not an isolated entity, but a global network intertwined with our daily lives and economies. In the face of these challenges, staying informed is our best defense. Thank you for joining us in this exploration of the global oil market.